Hello everyone! Colorado now has a new W-4 equivalent available for 2022, Form DR-4, Colorado Wage Withholding Certificate. My name is Chris, and on behalf of the Colorado Department of Revenue, we welcome you to this video. You can pause or rewind this video at any time to review the information provided. Let's dive in on the who, what, when, where, and why of the new form. At the end of this video, you will be able to evaluate if it may be beneficial for you to complete the new Colorado Form DR-4 and know how to complete the form. Every employee must complete a Federal Employees Withholding Certificate Form W-4. The default Colorado withholding calculation is based on the W-4. The new Colorado Withholding Certificate is not intended to fully replace the W-4 for Colorado withholding. The Colorado W-4 equivalent, Form DR-4, is designed to help employees with specific situations fine-tune their Colorado withholding. Completing the new Colorado Form DR-4 is completely optional for employees. If you choose not to complete Form DR-4, then your employer will calculate your Colorado withholding based on your Form W-4. For most taxpayers, completing Form DR-4 will likely increase your take-home pay, reduce your Colorado withholding, and reduce your refund when you file your Colorado income tax return. Consider the amounts you enter carefully. If you do not ensure that you have enough withholding and estimated tax payments, then you will owe taxes when you file your return, and you may owe a penalty. Employees may want to complete the Form DR-4 Colorado Withholding Certificate for one or more of the following reasons. If you expect to receive the majority of your income from one job, you expect significant income from other sources that do not have withholding, you expect to claim federal itemized deductions, or the Colorado Child Tax Credit. Employees should check the child tax credit requirements to verify that they qualify for the credit before using the Form DR-4 to adjust their withholding. Colorado Child Tax Credit is a new credit similar to the federal credit. It will be available for Colorado residents to claim on their 2022 Colorado income tax return when they file beginning in January 2023. The annual income limits are $85,000 for a married filing jointly and $75,000 for any other filing status. Qualifying children for the Colorado Child Tax Credit must be under 6 years old on December 31, 2022 for the 2022 tax year. Special note, a Social Security number is not required for a qualifying child. If you are claiming exempt status from federal withholding on your federal W-4, you can use DR-4 to request Colorado withholding. To qualify for an exempt status, the employee must have had no tax liability for the previous year and must expect to have no tax liability for the current year. If you claim exempt, no federal income tax is withheld from your paycheck. If you want Colorado withholding to be deducted from your pay, you can complete Form DR-4 to request Colorado withholding. You may adjust your withholding at any time. You may want to update your withholding for a number of reasons. Your wages or other income changes significantly, number of job changes, changes in filing status such as single or married filing jointly, significant change of federal deductions, no longer claiming the Colorado Child Tax Credit, new qualifying child for the Colorado Child Tax Credit, last completed a withholding certificate 3 or more years ago. Once you have completed Form DR-4, you need to submit Form DR-4 to your employer. They must calculate your Colorado withholding based on the amounts you entered. For each employer or job where you are wanting to adjust your Colorado wage withholding, a certificate must be submitted. You must complete a Form DR-4 for each job where you want adjustments made to your Colorado state wage withholding. Please note that the Department of Revenue may review and adjust your withholding in order to deter non-compliance of Colorado income tax. Next, we will complete an example of the Colorado Withholding Certificate. To download the DR-4, go to tax.colorado.gov. Under the Forms tab, click on Forms in number order. Click on the hyperlink for Form DR-4, Colorado Employee Withholding Certificate. The form includes the withholding certificate as well as 2 separate worksheets to help employees calculate their withholding. In our example, we will use Sam. His expected filing status is married filing jointly, so his withholding calculation should include his spouse's amount. They have one dependent and 2 jobs with a total income of $50,000 per year. The first part of the DR4, Section 1, is personal information. This section will need to be completed in its entirety. As you can see, we have inputted Sam's information. Line 2 is an annual withholding allowance. A withholding allowance reduces how much income tax an employer deducts from an employee's paycheck. If you want to adjust your withholding based only on the federal standard deduction and your number of jobs, enter the appropriate amount from Table 1. In Table 1, go to the first column, to the row with the expected filing status, which is also entered on the IRS Form W-4 Step 1C. For Sam, this is married filing jointly. Then go across that row to the column with the number of jobs that you and your spouse, if filing jointly, currently have. Sam and his spouse have 2 jobs. Therefore, Sam could enter a withholding allowance of $11,500 on line 2 of the certificate. However, if you have multiple jobs but expect to earn most of your income from one job, or if you also want to reduce your withholding based on your expected additional federal deductions and/or Colorado Child Tax Credit, then you should complete Worksheet 1. We will proceed to Worksheet 1 for our example with Sam. Worksheets are provided to help the employee calculate the amounts for their withholding certificate. Do not give these worksheets to your employer. For Worksheet 1, first enter your expected income on all sources for this year on line 1. Sam's total expected income, together with his spouse, is $50,000. Second, enter your standard allowance on line 2, which is based on your expected filing status. You will need to enter the amount for A, single or married filing separately, B, head of household, or C, married filing jointly or qualifying widow or widower. Since Sam's status is married filing jointly, he selects C and enters $23,000 on line 2. Third, your estimated additional federal deductions from the IRS Form W-4 Step 4B. For more information about federal deductions, see IRS topic number 501. Sam does not expect to claim any other federal deductions, so he will enter 0 or leave it blank. Fourth, if you want to claim the child tax credit allowance, find the appropriate amount on Table 2 and enter it on line 4. In Table 2, go down the first column to your expected filing status, which is also entered on IRS Form W-4 Step 1C. For Sam, this is married filing jointly. Then select the corresponding row in the second column with your expected income from line 1 of this worksheet. Sam expected income of $50,000, so he would select the line for $35,001 to $60,000. Finally, go across that row to the column with the number of qualifying children. The federal tax credit requirements are described in IRS Publication 972, and then the Colorado Child Tax Credit is only allowed for children under the age of 6 on December 30th of that tax year. Please note that the Colorado credit is allowed for qualifying children who do not have a work-eligible Social Security number. Sam's one dependent qualifies, so he would enter $7,000 on line 4 of the worksheet. Fifth, add together lines 2, 3, and 4 and enter the total on line 5. The total for this example would be $30,000 on line 5. 6. Enter the number of jobs that you and your spouse, if filing jointly, currently have. For this example, Sam and his partner have 2 jobs, so he will enter 2 on line 6. 7. Divide line 5 by line 6 to calculate the annual withholding allowance for each job and enter the result on line 7. For our example, $30,000 divided by 2 is $15,000. You and your spouse, if filing jointly, only need to complete this worksheet once, regardless of the number of jobs. If you have multiple jobs but earn most of your income from one job, you may want to divide line 5 unevenly between your jobs. For example, if Sam and his spouse earned 75% of their income from one job, they could use 75% of line 5, or $22,500 for that job, and the other 25%, or $7,500 for their other job. If you want the greater amount withheld, you can also enter a smaller amount than your calculation. Enter the amount you choose for this job on line 2 of the certificate. For this example, Sam and his spouse earned similar incomes from their 2 jobs, so they will each use the $15,000 that they calculated on line 7 of the worksheet. Because they have multiple jobs, they must complete a separate certificate for each job. Going back to the DR4 certificate, enter the amount you choose on line 2. Based on worksheet 1, line 7, Sam entered $15,000. Next, we will consider line 3, which is for any additional withholding you want withheld from each paycheck. If you and your spouse are filing jointly, expect to receive other types of taxable income that will not have withholding, you may use worksheet 2 to calculate this amount. Note that, in general, completing line 2 will reduce your withholding, and you may leave line 3 blank or enter 0. On the other hand, if you want to increase your withholding, you may choose to leave line 2 blank and only complete line 3. For our example, Sam does want additional withholding for other income that he and his spouse will receive, so he will proceed to worksheet 2. Worksheet 2 is used to calculate additional withholding to cover other types of taxable income that you expect to receive this year. Examples include interest, dividends, retirement income, rental income, income from self-employment, or as an independent contractor. Instead of using Worksheet 2, you could also use Form DR0104EP to submit estimated tax payments for any non-wage income that you receive. For more information about taxable and non-taxable income, see IRS Publication 525. You can also find information about the Colorado pension and annuity subtraction on our website at tax.colorado.gov/individual-income-tax-guidance-publications. For our example with Sam, let's say he earns $1,000 a year from odd jobs he completes as a handyman, and his spouse has a rental property that generates $3,000 a year. First, enter the amount from IRS Form W4 Step 4A on line 1. For Sam, this will be $3,000 for the rental property income. Second, enter all non-wage income you expect to receive on line 2. This may include income from self-employment or as an independent contractor. Here, Sam will enter his handyman income of $1,000. Third, add lines 1 and 2 and enter the total on line 3. This is the total additional income which needs to be reported. $3,000 plus $1,000 equals $4,000. Sam will enter $4,000 on line 3. Fourth, multiply line 3 by 4.55% and enter the result on line 4. Line 4 is the total additional withholding amount. $4,000 times 4.55% equals $182. So Sam will enter $182 on line 4. Fifth, divide line 4 by the number of jobs which you would like to add this additional withholding. This will give your additional withholding per job. If you only want to add to one job, enter the amount from line 4 on line 5. If you want to add it onto 2 jobs, divide 4 by 2, and so on. And if you want to add to multiple jobs, you will need to complete separate Worksheet 2 for each job. In our example, Sam wants to add his withholding only to one job, so he will enter $182 on line 5. 6. Divide line 5 by the total number of pay periods during this year from Table 3. For example, if you are paid weekly, divide line 5 by 52. If you are paid semi-monthly, which means twice a month, divide line 5 by 24. The result is your additional withholding per pay period. Enter this amount on line 6 of Worksheet 2, and then on line 3 of the DR4 certificate. Sam is paid bi-weekly or every other Friday, and from Table 3 there are 26 pay periods for bi-weekly. $182 divided by 26 equals $7, so Sam will enter $7 on line 6. Next, go to line 3 of the DR4 certificate to enter this amount. Lastly, sign and date the certificate and give it to your employer. Remember, you should only submit the DR4 certificate to your employer and not the worksheet. Once your employer receives your DR4, they must calculate your Colorado withholding based on the amounts you entered and report it to the Colorado Department of Revenue. The amounts for the DR4 certificate can be calculated manually using the worksheets that come with it or electronically using the DR4 Withholding Calculator. A link to download this Excel spreadsheet is available at our website at tax.colorado.gov/withholding-forms. The link is listed next to the DR4 certificate. Because this calculator has the formulas programmed, you only need to enter the highlighted field, and the other fields will calculate automatically. It also rounds all values to the nearest dollar. The DR4 calculator has separate tabs for worksheets 1 and 2. After using the calculator to determine your amounts, you will need to enter them on the DR4 certificate, sign it, and give it to your employer. The Colorado Department of Revenue aims to make complex tax information easier to understand. We do have a variety of resources available for you through the Colorado Department of Revenue, including our taxpayer website, taxpayer helpline, email, and local offices. We can help you navigate through the system. After all, taxes are a specialty. You can also sign up for our free emails to receive alerts regarding new tax information. On behalf of the Colorado Department of Revenue, Taxation Division, Education and Training, thank you for watching this video. The Colorado Department of Revenue is always here to help you be voluntarily tax compliant through information, education, assistance, and customer service.